Hello there, this is FairBinaryOptions.com, and today I would like to talk about the US dollar Canadian dollar as the market seems to, or this market seems to form or to end a bearish pattern. And by the time a bearish pattern is completed, normally we should only look to buy put options for that specific pair or for that specific financial instrument. So this is FairBinaryOptions.com, and of course, like mentioned earlier, the currency pair to trade here is the US dollar and Canadian dollar. Now, what to do with this currency pair? Well, the market is forming a triple combination, and a triple combination is a complex corrective wave that you can also find under our Binary Options Academy project. If you go over the website and look into the Binary Options Academy, you will find the triple combinations, or how to trade triple combinations. And this one is just, let's say, in front of our eyes. Of course, the analysis comes from the downside, from the left side of the chart here. And the triple combination, like the name suggests, has a triple or three different corrective waves that should be connected with intervening X waves. Now, in our case here, we have the first correction in the form of a flat. So this is an A, would be a wave A of a flat, then the B wave that is mandatory to retrace more than 61.8 out of wave A. So this would be the B wave A and B, then the C wave all the way to the upside, 1, 2, 3, 4, 5, all the way to the upside, this to be the C wave, A, B, and C. Then of course we need an intervening X wave. The intervening X wave comes in the form of a contracting triangle that acts as a continuation pattern. It is mandatory for this X wave not to go and retrace more than 61.8 of the whole previous correction, and that would be our triangle here. Let me make it a bit bigger and change the color for it, of course. And this would be the contracting triangle that acts as a continuation pattern here. As you can see, it is broken, retested slowly here, and then for price explodes higher. Now this is the first correction, and the first correction here is a flat. Then it is being followed by the second corrective wave, or the second correction, that goes in the form of a zigzag. This would be wave A, and this would be the B wave to the upside, A and B. And then we have the C wave all the way to the upside here, A, B, C, and that would be the zigzag. Now, A, B, C, flat, intervening X wave as a contracting triangle. A, B, C, this is a zigzag. And then we have the second X wave that goes in the form of a contracting triangle here, like this. This is the second X wave. It goes within the following A and C and B and D trend lines, of course. And then price breaks higher. But price breaks higher now with the third corrective wave. So we have what? We have a flat for the first correction. We have a zigzag for the second correction. Both of them being connected by an intervening X wave. Then another X wave here for after the second correction. And then we need the third correction, which usually in a triple combination, while is not mandatory, this is why we use the term usually, goes in the form of a contracting triangle. Now, a contracting triangle doesn't have to be a classical contracting triangle, but it is mandatory for the A and C and the B to D trend lines to contract. Well, if this is the A and C, then definitely this is the B to D trend line. And as you can see, they are contracting very nicely. But oops, the triangle seems to be broken, or the B to D trend line seems to be broken to the downside right here, right now, after the durable goods orders that we have in the United States, something like almost 1 hour earlier. That means that from this moment of time, the whole pattern should be completed. The third correction should be called a contracting triangle that is labeled A. And then the B wave to the downside. And then the C wave. A D wave that helps forming the B to D trend line. And then of course the E wave to the upside. So A, B, C, D, E, and just like that, what do you know? The triple combination is completed with the B to D trend line broken to the downside, and chances are that this market from this moment on should move lower. Now it is still summer trading, and as you can see, for something like more than 1, 2, 3, 4 weeks or 1 month, this market went nowhere. And it might be that would be the name of the game moving forward too. But if you really wanted to see how a triple combination looks like, this is how it is looking like. Again, flat the first correction, zigzag the second correction, contracting triangle the third correction, all of them connected by intervening X waves. Normally this is a bearish pattern. We are trading binary options, therefore this means put options with end of week expiration date. Of course, as this is Tuesday, we want to avoid being trapped on a low range and let the market do the talking from this moment of time. So buying put options with end of week expiration date for the US dollar and Canadian dollar is our recommendation here on fairbinaryoptions.com. And if you want to hear and to find out more about trading triple combinations, again, go on the Binary Options Academy, look for the triple combination project, and learn from there, as it is a very useful mini educational series. Have a great day. Bye bye.